So what we're doing with this part of our accounting is we're actually taking a look at a case study where they were looking at effective tax rates using data analytics. So we have this document that has all this stuff in it, and I do have this uploaded on Canvas for us to look at. And if you go and read through it, there's a lot going on, but let's just jump right to kind of the requirements. And this is where we're going to be doing a lot of our work. Now, I do want to point out, as you look through this, there's a lot going on here. This extract the data has already been done for you. I've gotten some data for us. So transforming the data. This is all cleaning the data set and calculating out a couple things. Effective tax rate. Something called capped effective tax rate. And we'll come back to that. And then really here's where we get into a lot of what we're going to be dealing with is the meat of the data is analyzing the data. And we are going to be doing this in Excel. And so some of the things we're going to be calculating out is our pretty standard statistics that we've been looking at. The big ones being mean, median, standard deviation, minimum and maximum. First and 99th percentiles. So I will show how we do that. We've talked about percentiles. We haven't done those. First and 9th deciles. What a decile is kind of like a quartile is a special percentile, so is a decile. And so a decile just means every 10. So the first decile would be 10%. The 90th decile, the 9th decile would be 90%. And then we're going to make a pivot, first and third quartiles, which we know how to do. And then we're going to do a pivot table of ETR is the effective tax rate and CETR is the cap effective tax rate. And we won't really worry about this other stuff. But as you poke through here, you'll see there's a lot of calculations in here. There's a lot of things that we're supposed to do. This is a very, very big problem. And we get down here, regression analysis, multivariable statistics. There's all this stuff in here that we don't know how to do. But that's fine, because we can do a little piece of this, and that's what we're going to work on. But this is pretty typical of a very upper level problem. And one thing that we have to think about is, okay, if we get a big problem like this, how do we handle it? Because it can seem overwhelming. It kind of comes back, there's an old joke, and the thing is, well, how do you eat an elephant? Well, the way that you eat an elephant is one bite at a time. Now, it's going to seem like it's overwhelming because there's a lot of stuff here, but you any big complex problem, you kind of break it down and you start biting at it and eating it a little by little everywhere you go. So anyway, let's look at the tax data that we do have for you. So this is all cleaned up. And if I go look at this, there's like 26,000 data points. So this is an interesting data set. And this is actually coming from tax policy that was put out a couple years ago. So this was used by the Biden administration for their one of their economic policy packages. And this is a list of companies that were referred to as dirty dogs. And what that means is they were referred to as, hey, these were companies that made money but didn't pay any taxes, or didn't pay any federal taxes. And so what we're going to do is we're going to look at this and we're going to calculate out those things that I talked about. Basically our 5-number summary, and we're going to include in that our first and 9th decile and also our first and 99th percentile. And I'll show you how to calculate that here in a minute. So let's just quickly look through here. What does all this stuff mean? CIK number is a tax number that most of the companies have assigned to them. D-date is their declaration date of their taxes. The company's name. SIC is a number referring to their industry. So this 4-digit code will tell you what the industry is. FYE, I kind of forget what it is right now. Not really all that important for what we're doing. So as I look over here, income tax, expense, benefit, we're not going to worry about net income or loss. So how much money a company made or lost during that time period. So that one we are going to be concerned with. We're going to calculate. These are all just different parts of the SIC number. This 2SIC is important because it allows us to look up industry, and I'll show part of that in the wrap-up of how we can put stuff together. And actually, it's U through X are kind of what we're going to look at. How much money they made pre-tax, how much money they made pre-tax just on the domestic side, so not including international stuff. And so then this is the GAAP effective tax rate. So GAAP is generally accepted accounting principle. And so this is just the pure rate. They're going to take what they made or what they paid out in taxes divided by what they made. It's going to give a percentage. This number is going to be weird, especially because this data set was pulled over COVID. And because of that, there's a lot of weird timing of when taxes are recorded things. They call them temporal rates. The reason this is going to be weird is you're going to find there's going to be insane numbers that you aren't going to believe. Like a company's going to be paying 10,277% taxes. Well, that's ridiculous because nobody pays that taxes because they go out of business. But just because of when the timing hit, it gave a weird number here. And so what we have over here is the GAAP capped effective tax rate, which basically adds some rational bounds to it. So basically nobody pays less than 0, nobody pays more than 100. It's a good way to kind of look at things. And so this is what we're going to be doing for our assignment, is we're going to be calculating out some of this stuff. So specifically, we're going to calculate it out for these 4 columns: the pre-tax income, domestic, the GAAP effective tax rate, and the GAAP capped effective tax rate. We're going to be doing our 5-number summary, average and standard deviation, but then also calculating out that 1st percentile, 10th percentile, 90th percentile, 99th percentile. And so we're going to do that for these 4 things. So just before I show you how to do the percentiles really quickly, so we have all these things here. These are the different tax filing years because there are a ton of data points. We have multiple years of data in here. We have, I'm not really sure I don't remember what the firm ID is. So we have ITEP year. So ITEP is the nonprofit that put together this data set. And so this is, ITEP are the ones that coined the phrase dirty dogs. And so if the ITEP year says true, like down here for this one here, this is the ITEP organization saying that, hey, this company made money but didn't pay any taxes. And then this is the ITEP year with GAAP measures, is really talking about the money that's just going right to the federal government. And so once we calculate out these rates, we're going to see some weird stuff, but we'll talk a little bit about that at the end. All right, so how do we calculate out a percentile and a decile? So we have our equation, just like we did with quartiles, just percentile. We have an exclusive form and an inclusive form. The exclusive form just means that it will do the 1st to the 99th percentile. Inclusive will also include the 0th, which is the minimum, or the 100th percentile, which is the maximum. And so we go and we calculate this the same way that we do the other ones. We have an array, we have a K. So the array is just going to be the numbers that we're looking at. So let's just say I was looking at that set of numbers. Obviously, we'd be doing the entire thing, and I would be using a range name because there are 27,000 data points. And then you comma, and you tell it what percentile that you want. So if it was going to be the 1st percentile, it would be 0.01 because it is in decimal form. You close it up, and that would give you the number. I'm getting an error because I don't have enough data points in there. So let me go and let's redo this here. And let's select the entire column. So I did Control Shift and pushed down on that. And that kind of executed my data. And so there we go. So the first percentile would be at negative 3.00. Now, W and X are in percentages, so that's actually negative 300% tax rate, so that's insane. But that means that 1% of the data is at that point or below. So if I wanted to make it 10%, or the first decile, that'd be 0.1. So actually we'll go and I'll just change that for you right here. There we go. So that means that 10% of the data is below 0.179 or 17.9%. And then you just kind of continue off it with that. All right, so once again, so what we're doing is the 5-number summary for those 4 columns. We are doing the first and 9th decile, the first and the 99th percentile. And then one other thing that the assignment, the case study brought up that I would like you to take a look at and give a try to do is to make a pair of pivot tables. One being the company, data by the company, so we can do the different companies and do those 4 columns of pre-tax income, pre-tax domestic, GAAP effective, and GAAP capped tax rate. And then I would also put a filter in there so we can look at different companies. I would filter it by the 2 SIC. And there's some interesting ones in there, and you can kind of look them up and look at things, but 78 would be motion pictures, 82 is educational services, 73 is business services, 55 is auto dealers, and then 53 is like general merchandise stores. But that's just something that you can play with. So do one of those as data by company, and do one of them by years. So those are our 2 pivot tables. So once again, put all that stuff together, and then I will have a video kind of showing you how to do this and how to wrap it up, and just to talk about the numbers a little bit.